Hi, this is Peter from Game of Trades. I'm here to help you navigate through this crazy market. So make sure to subscribe to the channel so that we can help you every step of the way. Now, in the last video we made on the technical picture of the S&P 500, we took a look at this wedge pattern. We took a look at the divergences we had on the 8-hour chart with the price going up and the MACD coming down. And so I am referring to this video right here where we took a look at the short-term technical picture, not the speculative bubble video. This video was more for investors who want to know our long-term view on the stock market, not from a trading standpoint. So today we're going to focus on that short-term picture to find out where the price may be heading in the next few days and maybe even few weeks. By the way, this video was sponsored by Prosperous Universe. I'm going to talk about them a little bit more towards the end of the video. Now back to this wedge pattern right here. We have those divergences in place to this high right here and the MACD waning down. That tells you momentum is a little bit overextended on this move right here, and we could see a small pullback. That's what we talked about in the last video. And when you have this type of divergence, you either get a correction in time, you get a correction in price, or you get a correction in both time and price. So that's what we talked about last week. And so far we did have that correction in price right here because of that news about the new strain, but we didn't even get to our second target. We fell just shy of our second target. And by the way, these are not really targets. They were areas to step into. That's what we're referring to when we're talking about a potential pullback, areas for traders to step in and buy. Because we do ultimately believe that if there is a correction right now, it's going to be relatively shallow. And we say that not because we have a crystal ball, right? We don't know what's going to happen, but we're talking about from a probability standpoint. And from a probability standpoint, let's get on the daily chart and we're going to talk about 3 specific points right now that tell us that the S&P 500, the stock market, has a bullish structure. Right? And as long as you have a bullish structure, you don't want to be looking for massive downside. You want to be looking to buy the dip, right? It's very different to what we had right here. Right here, we had a bearish structure. We had a major leg down. We were under the zero line on the MACD, and we were looking for that move to fail. Right now, what's happened recently, we've had that bullish breakout of this consolidation pattern. So what you have from a very simple standpoint is a uptrend, consolidation, and breakout. And so that's bullish. We might have a shallow correction, but ultimately that is likely to be followed by a rally and not a huge long-term reversal unless we get a black swan event, which obviously is very difficult to predict. But you have to, of course, be aware that anything can happen in the markets. You can only put the probabilities on your side, which is what we do every week on this channel. So again, make sure to subscribe if you haven't already. So that's the first point, bullish breakout, bullish structure. And the second point, something I mentioned quickly back here, is the MACD. It's trending above the zero line. That's something we use a lot to determine trends in the market. If you've got the MACD oscillating above the zero line, and I'm talking about this line right here, as long as it's above the zero line, you are in an uptrend. When you're below the zero line, you're in a downtrend. And so that really tells you what kind of bias you should be having. And we can zoom out to see how well that works. Back here, during the 2018 stock market crash, you had the MACD come down below the zero line at the very beginning, and it remained under the zero line throughout this entire period. And the zero line even acted as resistance right here, confirming, telling you you're still in a downtrend, right? You have a crossover right here at resistance, and that's where the markets failed. And then as soon as the MACD went back above the zero line right here, that was your switch in bias. That's where you can start to expect a steady uptrend to form. And that's exactly what happened. You had multiple tests of that zero line from above, and every time it held, you had a brief whipsaw signal here. Nothing is perfect. But again, if we look at 2020, what's been happening, we had this massive downtrend. MACD crossed the zero line very quickly, so we started to get aggressively short on this move down. We expected the markets to fail at these levels because the MACD was still in a downtrend. It did not work. We had a V-shaped recovery, and this is where we started to flip to bullish, right? We broke above these support levels. We got very bullish, and since then, the trend, the uptrend, has been up non-stop throughout that entire period with two brief tests of that zero line. And on both of those occasions right here, we did buy the dip. So right now, we're still above the zero line. We are on bearish momentum. So that's something to watch out for. The momentum is still bearish in the very short term. So that's why we say we could be having a short-term correction, a shallow correction to one of these levels if we see that minor trend line break down. That is a possibility, and that's something traders should be prepared for. It's something we're prepared for on gameoftrades.net. Now, by the way, if you're learning something new in this video, if you're enjoying this video, make sure to drop a like. It really helps our videos get pushed out to a wider audience. It really helps out the channel. So thank you very much for doing that. And don't hesitate to leave a comment down below telling us what you think about our videos, telling us what you're doing in your trading. It's always nice to see the different views, opinions, and approaches we have on the stock market. The more we can have an open discussion on the stock market, the more we're going to be able to be prepared for all scenarios. So we covered two things that suggest the S&P 500 is still within an uptrend. We have that breakout, and we have the MACD still trending above that zero line. Now I want to highlight one more thing telling us that, and that's on the chart of SPX. This was the futures chart, so we're going to take a look at the daily S&P 500 chart. And so on this chart, I use it for one trend line, and it is this long-term resistance trend line from the 2009 low all the way to here. Look at how well it captures all the major resistant lines throughout the bull market, right? In 2014, 2018 right here, 2020. And even recently on these two rejections, we had the S&P 500 test that resistance. It's only very recently, over the past few weeks, that we've been able to break out above it and rally significantly above it as well. So this is bullish. This is a bullish development short term. Now, this is typically what you see towards the end of a bull market, right? You zoom out, you look at 2008, same thing happened. We had that steady grind, break out above that resistance, back test, blow off top, rinse, wash, repeat. That's what we've been saying for months now. We've been expecting that breakout to occur. So as long as we're staying above that trend line, we should have a short-term bearish bias on the S&P 500. And again, I'm talking about that from a swing trading standpoint, not an investment standpoint. We're out of the stock market from an investment standpoint, but from a trading standpoint, right, this is super bullish. You want to be long on that type of a breakout as long as the price remains above this trend line. There's no reasonable explanation to be short, right? It could still, there's literally no resistance right now in the S&P 500. Where are you going to short from? You're just guessing if you're doing that right now. If we come down here, make a false breakout scenario here, that's a nice shorting opportunity right here. That's where we'll get very bearish and we'll have plenty of time to short a big move down, right? We don't care about this tiny percentage gain. If we have a false breakdown from this level, we'll have plenty of time to go short and trade that false breakdown scenario. But until that happens, right, no reason to go short. Now, as I said, ultimately we think this is the last run up to a major top, right? As I said, it happened in 2008. It happened in 2000. I've already showed multiple times the chart from the dot-com bubble. So we're much more interested in value plays like gold and like Bitcoin. So if you're interested in knowing more about our long-term investment strategies and knowing exactly when we start accumulating gold and silver, this was an article from the 30th of November on gameoftrades.net. where we talked about accumulating long-term gold and silver as it was testing that 200-day moving average. And same thing goes for Bitcoin. We had investment setups back in October, and also recently, just before the breakout, we posted Bitcoin, the opportunity of the decade. So if you're interested in investments outside the stock market, go check out gameoftrades.net. Now, again, we have been wrong about the stock market before. Anybody who tells you they have a perfect track record is lying to you, but we are pretty proud of what we've been able to accomplish throughout 2020 and how we've navigated through this crazy market, just absolutely unprecedented moves. So definitely a very interesting market to navigate over the past few months. So now let's jump back into the short-term price action of the S&P 500. What we're seeing right now, right, we have this minor uptrend line here, and we have these small candles, right? We had that breakdown, snap back, and right now we're just barely holding above that minor uptrend line. Now, to me right now, as of now, this does not have a nice look to it. It looks like it wants to break back down. We'll have to see what happens. If we have another breakdown, we could see the support levels get hit, maximum this one, right? If we start going below this level, that's when things become worrying. That's when that bullish structure that we talked about at the beginning of the video gets heavily impacted, because that would look like a false breakout. That would be a huge false breakout. We'd break back below that long-term trend line we talked about, and again, we'd be looking for shorting opportunities in this zone here. But that's very, very far away from happening. We'll be quick on our feet if that happens, but for now, we're still expecting a reversal off these one of these levels. If this trend line holds, we'll be looking for more upside, and our last target from our S&P 500 trade will get hit very quickly. 37.89 is our next target from this trade right here. As we were backtesting that consolidation pattern, we've already hit target 1, target 2, and now we're already heading for target 3. Again, we'll see if we have a short-term correction before hitting that target or not. If we don't get that correction and we hold that trend line, watch out for big gains, right? Let's look at the daily chart, and you can see that momentum is bearish. If we hold that trend line and momentum switches to bullish, we have a bullish crossover, you're gonna see that uptrend we've had accelerate, right? Very similar to this period right here. We had a brief bearish crossover, then a bullish one, and that's where we had that blow off top scenario. And same thing again right here, bearish crossover, bullish crossover, blow off top. So that's definitely a scenario for you short traders out there. Be careful of that. Don't enter a position too quickly. Wait for that breakdown, sell signal if you want to get short on the S&P 500. I know I'm not doing that, but if you are, be careful. This is a very strong rally, very powerful momentum. Do not forget the power that we've seen behind this rally. Do not forget that this is still the same rally that we've had throughout 2020 with the same liquidity. So that's about all I wanted to cover in this video. I want to wish you a Merry Christmas and Happy Holidays. In the meantime, good luck on your trading, and see you next time.
When the first generation ships arrived, humanity had little more than themselves to rebuild civilization. They were the pioneers who risked their lives to mine the resources needed to establish the foundation of everything to come. The engineers who developed and built the machinery needed to jumpstart industries even on the most hostile planets. The visionaries who founded new cities which were to become the beating hearts of society and commerce in the new worlds. The entrepreneurs who saw the opportunities for great profits to be made by running the trade routes between developing territories. Explorers who ventured into the farthest regions of space to seek resources and new lands. And there were the leaders shaping the future of mankind by forging alliances and waging conflicts. What will be your role in Prosperous Universe?